We're going to turn now our focus to commercial real estate. Jones Lang LaSalle, a global real estate services firm, says that sovereign debt concerns in Europe and the U.S. are slowing the heightened investor demand that we've seen in just the past few months. Well, the company is one of the more than 240 taking part in this week's Canaccord Genuity 2011 Growth Conference in Boston. Lauralee Martin is the CFO of Jones Lang LaSalle, and she joins us now from the conference. Welcome to Fast Forward, Lauralee. A pleasure to have you. I got to ask you right off the bat, we've been so focused on what is happening in Europe today, particularly the banking sector there. How is that impacting the outlook for commercial real estate in that region?
Well, this is not a new issue in Europe. So what I would say is that commercial real estate, particularly core assets, quality real estate, cash flow real estate, remains a good alternative for equity investors, particularly as you start to think about volatility of other indexes. So it's not a marketplace that has been highly leveraged as it's come back into trying to recover from the downturn. So stays pretty positive.
Let me ask you, you and I were just talking during the commercial break, because here in the U.S., the securitization machine really does feed what happens in commercial real estate, right? We've certainly see that in residential real estate, but lately there's been some bad news on that front. There's been issues with getting ratings. We're also now seeing spreads widen out quite dramatically. Does that indicate that we could see a downturn now here, at least in the U.S., in commercial real estate?
I think what is going to happen is you're going to have less of an expansion into a recovery and a slower recovery, because it's the CMBS marketplace that starts to reach out into more of the riskier assets, some of the more tertiary markets, and really provides a capital source to a broader base of buyers of real estate than what has currently been able to play in the market. So it's more of a potential slowing of activity than necessarily a setback at this point.
And then, Lauralee, I apologize, we only have about 30 seconds here, but I do want to talk to you about where you think the hottest real estate areas actually are. We talked about Europe and U.S. I know China's at the top of your list.
There's no question that we've looked at our results, which were fantastic through the first half of the year, with our China business up over 30%, our India business up over 40%. Real estate is still very strong in Asia, and there's a lot of press about residential, but commercial is quite sound and should continue to be as that part of the world expands.
All right, Lauralee, we have to leave it there.